Hello, everybody. Welcome to the Market Recap. I am Dan Hodgman. It is Tuesday, October 27th, and I got to tell you, I'm feeling great today. 3380 back in play, giving us some opportunity there, and I am also, after today, I am stepping out for almost 5 straight days. I am looking forward to a little time off, so I won't see you guys until next week, but John will be here filling in. Such a nice guy. He gets back after 2 weeks and already willing to cover for me, so big shout out to John that's going to cover me there. I am looking forward to doing some work. It is officially fall, almost winter. As a lot of you guys know, I do a lot of snowmobiling, and at the end of last season, I bought a snowmobile last year. And end of last season, I blew the motor on it, and instead of paying someone else to do it, I've been doing it myself. So that will be my project the next couple of days to get it all rebuilt and running once again. So I'm looking forward to that. And I'm excited that winter is upon us. The lakes are starting to freeze all the way up north where I go snowmobiling, so that's a good sign. And starting to plan a couple of my vacations. So, man, it's just a good day. I'm feeling good. I hope you guys are having a great day. Dow is now negative for the month of October. We are 1 week away from elections. I am definitely excited about the volatility that we're going to start to see here. We know that volatility number continues to move higher. I know it's something we tend to look at the end of the day, but we're still sitting at that 33 comfortably and well above 30. So Dow looks like it's closing right now. Lowest level since September 29. So pretty steady sell-off here so far towards the end of October. No surprise there. Still uncertainty. I know polls are saying one thing, but then you're starting to see them shifting slightly. We had a new Supreme Court justice sworn in last night. So there's definitely a lot of people just kind of sitting back, concerned, waiting to see what happens. Totally understood there. We got that going on. We have coronavirus surging in the United States. No questions about that. We are seeing coronavirus continuing to surge, not just in the United States, but around the world right now. Hospitalizations are rising. So that is also the added fear coming into these markets. So lots to be paying attention to. GDP is Thursday. Gosh, it's just constant. There's constantly stuff hitting the blotter here this week. Microsoft should be announcing their earnings here this afternoon. And just opportunity galore. So part of the reason I am actually taking some time off, not just because I want to get my snowmobile rebuilt, but I want to be prepared for what's to come next week. I am not going to get myself involved the tail end of this week. I'm going to wait until probably Tuesday, maybe even Wednesday, and I'm looking for some big opportunities to arise. Long or short, doesn't matter to me. I'm a trader. My job is to take advantage of the moves that present themselves. So I do want to say hello to everyone. Felix. Alex, that's a new name. Alex, welcome to the recap. Charles. And Charles. Did stocks, the clocks changing? Yes. Nope. That happened Sunday the 1st, Saturday night of this weekend. Oh, thanks, Charles. Tanya. Good to see you. Where are you going? What are you doing? Well, time off. Yep, just building the snowmobile and getting ready for snowmobile season. Good to see you. And step 2 begins next Tuesday. Practice this week for me. Great idea. If you are in a transition, if you're in that funded account, honestly, it doesn't matter where you're at in your trading. It's going to be hectic. Tail end of this week, that first half of next week, going to be pretty wild. We don't know which way it's going to go. It's not our job to know where it's going to go, or it's our job to take advantage when it starts to move. So just be patient. Make sure you're there to have the opportunity to trade it, but don't put yourself in a position where you can lose it all and have to start back over. It's very important to be cognizant of that throughout our trading. Just because it's going to be a big high volatility time doesn't mean you're the trader to trade in volatility. Everyone is totally different, especially if we're trading outrights. It can hurt us extremely bad. Mick mentioned it in our coach's playbook today. Funded traders will not be trading during that time. We don't want them to be in a situation where they can get in lock limits, where they can be in positions that they can't get out of. Just not safe trading. Not safe trading. I can promise you I won't be trading Tuesday night. I will be flat, or at least delta neutral, to manage my risk and keep things as small and as simple as possible. All right, enough of me rambling. Let's go ahead and take a look at these charts, see what we had going on here today. Lots this afternoon. Mike, good to see you as well. All right, as always, crude oil took off to the upside here. Big tear finally. We opened up. We made a check. We worked ourselves right down to settlement price right here, 38.56. We came to yesterday's point of control at a couple cents through there. From there, great opportunity to say, look, here's our bottom. Let's see if we can catch this move to the upside. And maybe we missed the initial move. We got our next pullback, and from here, it was off to the races. A lot of places start to look for opportunity. First one you can look to, 39.10. If we get through 39.10, we may have some opportunity. Well, we blew through, came right back. So this is where, as soon as the market starts to come back, this is where we're starting to think here, if we're in a trending market trade, we want to bring our stops up, make sure we lock in some profits. This is where we're starting to think about bringing up our stop. If we said 39.10 is kind of what we like, we've seen the market find support and resistance there multiple times. The overnight session bounced right off it and broke. Here's our opportunity. We blew through. We're not going to put it right at 39.10. We're going to give ourselves a little bit of room. So maybe we give it 10 cents, give or take, maybe 15 cents, because we were going to lock in profits, but our job is to hopefully take advantage of a trending market. So we bring our stop up, and that was our opportunity to kind of trail that stop without getting too close and ensuring that we're locking in profits as this market goes. So we did see a nice, decent size move here today. We rallied about $1.30, $1.35, all the way to the upside, and this market started to finally slow down around lunchtime, and we're settling right in nicely at 39.50. Next, S&P 500. Tight channel, tight range, didn't get directional either way on us. Floated right around settlement price, which is 33.93 half, 33.93 half, so market kind of floated up and down from settlement price. We have finally, man, I was liking it. We caught a perfect bounce right off of 80. 80 rallied us right to settlement price, and we have broke from there. This market is now breaking below 80. Big level to break through. Those of you that have been watching us for a while, going back probably a month now, 33.80 was a pivotal spot. We were finding great opportunity at 80. 80 is back. 80 is presenting itself. Let's look for opportunity. Every time this market comes here, let's see if we can find something. Don't feel like you have to get in every time, but definitely an area to start to pay attention to. So if we continue to break this swing low from yesterday, market still paying attention to it all the way down here, 33.56. But today, we fell in line. We fell into a range. We had 33.80. We already knew it was a level we wanted to pay attention to. The high side was essentially high volume nodes, a little bit of support from the overnight session, but really just constantly looking for opportunity anytime this market came down towards that 33.80. But tight ranges here today. A little bit of a hangover day from yesterday, to say the least. Same thing goes for Nasdaq. Nasdaq, we saw a little light, but it's starting to break back down. It was essentially a trend higher all day long, and we're kind of rolling it back over right now. Market open was hella volatile. This thing was all over the place. Tough open, but finally it kind of fell into a channel range to the trended slightly higher and then fell into another channel. So we've gotten a little bit tighter here, but nice move. Off of settlement price all the way down 11,492. So that initial move came check settlement price. From there, was our opportunity to look and see if we can get this thing to run up. Now, those of you paying attention last week, we kind of drew out a little bit of a range that we were watching pretty consistently in the Nasdaq. Our low here right around 600, just above, and our high up here by 740. This market is now hitting that wall, trying to get back into that 600 range that we were looking at last week. Next, let's go ahead and look at the gold. Gold working its way slightly higher here today. Settlement price 1905.30, and the market opened up. Checked our settlement price once again after John spoke with you guys this morning, and from there it took right off to yesterday's swing highs and hit the wall once again. Starting to pay attention to this. This is actually today's value area high, 1912. Area to start to pay attention to. Market has consistently reacted around this price, right? We can see a bounce off of it here. A little bit of a resistance here. Once again here, once again here. This is now where we're going to start to pay attention to things and see if maybe there's some opportunity. The more time and volume traded at a price, the stronger that price comes, in my opinion. So I'll be continuing to pay attention to 1912. Currencies, we got a little movement on them here today. Oops. Let's adjust. Here we go. Today's regular trading session. The euro was fairly range bound until the very tail end of the day. This market fell very comfortably within a nice range. We kind of range essentially our value area high 118.46 down to 118.36. That was essentially a range here all day long until the break at the end of the day. But you've heard me talk about this a few different times. We want to pay more attention to that range bound versus the breakout. The breakout is hard to find. The breakout can cause false breakouts. If we're looking for the breakout, we're going to miss opportunities. So today we had 1, 2, 3, and 4 opportunities running in this channel versus if we can kind of find and define a little bit of a channel for us. Maybe we're paying attention to this overnight swing high and we're checking yesterday's value area high down here, and we kind of come in with an idea of some sort of channel or range to look at first. We can find some opportunities within that, execute, maybe be profitable on 3 or 4 smaller trades as opposed to looking for the breakout. Breakout came at the end of the day, and maybe if this was the one that you said, I'm going to stay range bound, and you got stopped out here, not the end of the world because you found some good profits throughout the rest of the day. Now, the yen, which has just been so quiet during regular trading hours lately, continuing to see some nice directional move. Market opened up, rotated just lower down to 95.56, where we found some resistance and some support last night. Remember, what was once resistance becomes support. Market found a little bit of support there, and it was off to the races from there until we got essentially to last week's swing high right up here at 95.90. We didn't get all the way up there. We got pretty darn close, 95.85 half. Market found that resistance and started to roll over from here. All right, guys, these are our markets here today. Thank you for tuning in with us. Like I said, I will be gone the rest of this week, but John, the wonderful Mr. Hoagland, will be here covering for me. So big thank you to him. Alex, new to Top Step, been trading on Thinkorswim for a few years, starting the Combine soon, just trading the simulated account for now to learn the software. Awesome, Alex. Glad to have you here. Excited to see what you can do. Every day, we are live Monday through Friday with the market forecast at 8 a.m. Central Time. And Monday through Thursday, the market recap, 3 p.m. Central Time. And on Tuesdays, approximately 11:20, between 11:20 and 11:30, rallying up a few different guys and getting that conversation going. Everyone's usually a little antsy. We have the Coach's Playbook on Tuesday. Sorry, got a little brain fart there. Coach's Playbooks on Tuesday. So make sure you check us out. Let us know what you think and ask any question you can, and we'll do our best to get to it. So, like I said, news here today. Microsoft earnings per share beats 182 versus 154. Michael, hey, Dan, does Top Step have any trading educational courses? Michael, we don't have any specific courses, but what we do have is personal coaching. I recommend you check out, for starters, our weekly group coaching at topsteptrader.com. Up in the right-hand corner, I believe it's the About tab. Just select Performance Coaching. If you scroll to the bottom, there are links to our weekly group coaching. That's with John every single Wednesday at 1 p.m. Central Time. We do have some content on the YouTube page. We have a couple webinars that we recently did called Back to Markets or Back to School series. We talk about everything from charting patterns to auction theory, risk management and trade management. I think those are 4 of them there. And then again, we have our personal performance coaching where there's a daily class, phone calls, chat rooms, and we work with you one-on-one to help you with your trading. So we have some stuff, but all right, Charles, how does limit up and downs work during high volatility? Well, Charles, it's a great question. I think it's something we all want to refresh ourselves with. So when volatility increases, every market has different limit ups and limits downs. That's where the market locks us out and shuts us down for a little bit. So what I recommend doing is find the product that you trade, go to cmegroup.com, go through contract specs, and know where the limits are. Now, you're going to have a couple different styles of limits. First off, you have time-based. The limits are all determined based off of time. So essentially regular trading hours versus overnight sessions. Take equity markets, for example. S&Ps are going to be different than the others. S&Ps have a 7% dynamic, or excuse me, it's a 7% limit down in the overnight session with a 2% dynamic limit after that. Dynamic is a rolling limit within 1 hour. So when you are entering into dynamic limits, first thing I'm just going to say is it's really hard to know where that market's going to lock out. So you have to be extra cautious. So again, every product is going to be totally different. Nasdaq, Dow, Russell, they are a 5% in the overnight session. Then we move to intraday. It goes to 7, 11, and then 20%. But then in the last 45 minutes, there is no limit other than the 20%. So if we're down 4%, in the last 45 minutes, we can run to 20% down without any circuit breakers being hit. It is a difficult subject. There are a couple coaches' playbooks that we have done where we broke them down as best we could. And maybe it would be beneficial if this is something we talk about on a futures coaches playbook again to reiterate. But basically what's going to happen is if you hit a limit, just because it's going lower does not mean if you're short, you're in the winning side. You want to get out before we hit those limits. Because if we hit those limits, you are locked into a position if it starts to move lower. Now, if the buyers come in and start to pick things up, you might be okay. But we definitely don't recommend sitting in any trade near the limit. So start very simply. Go to cmegroup.com. Any product you are trading, read exactly where the limits are, and understand that times traded are important, as well as the difference between lock limits, dynamic limits. Every product is totally different. It's tough. It's a tough question. All right. Daryl Manning wouldn't cooperate. Some days we got it and some days we don't, I guess, Daryl. Charles, yeah, thanks. If you got that link, it'd be great to see you drop it in. All right. So as always, everybody, we kind of touched on news. Election, 1 week away. It's going to be volatile. We got heated battle going on right now. Let's just see here. Tomorrow morning, 7:30 a.m. Central Time, international trading goods, as well as crude oil, EIA. Sarge, that was stop. Sarge just smashing his hamburger down here. 9:30 a.m. Central Time, we have the EIA Petroleum Status Report. And then don't forget, Thursday morning, GDP. All right. As we've been touching on since I've been working from home, we watch Tesla stock, $425. And like I said, VIX 33, sitting right at that 33 mark. Kind of floated all around it here today, ending the day relatively unchanged. And all right, everybody, at this point, this date in history, 1904, the New York City subway opens. 1904, pretty crazy. 116 years ago, the New York subway opened. Let's see, we got a few other ones here. I thought I did. I guess I don't. Thought I did. My alrighty. All right, everybody. I'm going to get ready to go start my weekend. I look forward to being back here soon. I hope you guys all have a wonderful day. Wonderful rest of your week. Stay safe. Stay smart. Stay warm. Cold weather is here. So, on that note, I'm getting on out of here. You guys have a great day. Stay safe. Trade well. Wash your hands. I look forward to seeing you guys all in the markets. Take care, everybody. And hey, John, good to see you there, as well as James.